Welcome to Business Middle East. This week we discuss the latest financial scandal that has rocked international banks. A new scandal has been added to a long continuing list from previous years. The affair is shining a spotlight on a group of major international banks in Europe and the US. The regulatory void has created a number of accusations along with multi-million-dollar fines resulting from market manipulations. As the UK Financial Control Authority issued one of the most expensive fines in its history, experts believe that it won't be the last scandal. Trust is now at a tipping point, as investors could change their investment destinations into countries where there are more favorable regulations. Here is the story.
American and British authorities fined 6 international banks a total of around $6 billion, about €5.5 billion, for manipulating foreign exchange rates. JP Morgan, Citigroup, Barclays and the Royal Bank of Scotland admitted their involvement. US authorities said traders used private chat rooms and other means to manipulate the US dollar and the euro during a period that included December to January 2007 and January 2013.
Simply put, exchange rates are prices to buy and sell currency. They should be set competitively, the same way prices are set in any market. Instead, the members of this cartel chat room conspired to gain unlawful profit by manipulating those exchange rates. The banks pleading guilty today are not just ordinary market participants. They are market makers. They represent 25% or more of dollar-euro exchange rate transactions each year. As such, they were uniquely positioned to manipulate this market.
Also involved in the scandal was Bank of America and UBS. As UBS was the first bank to report misconduct, it avoided criminal charges. But it received a related fine over the affair from the Fed amounting to some $342 million. The scandal and investigation has resulted in a push towards an automated foreign exchange market.
For more on this issue, joining us is Stefan Davy, Director in ADE Securities Abu Dhabi. Thanks for being with us. For many years, Forex manipulation and the scandals have been ongoing. Why are regulators not taking more stringent measures beyond the fines?
Well, I think the important thing to say now is that they have taken action, and that is very, very important for the region. We want to see that there is a level playing field, that there's no manipulation behind the scenes, and now that we've got that, now the regulators have acted, I think banks will be very much happier with the situation. It is also worth probably mentioning that the size of the fine doesn't really affect the banks or affect the investors over here. The banks are very large, the fines are relatively small, but what they want to see, the investors, the regional investors want to see is that there's good liquidity, the ability for them to trade and the ability for them to make money out of the markets.
What are the consequences of these violations concerning the stability of exchange markets and investors?
Well, it's worth saying that the exchange market, the FX market, is worth $5.3 trillion a day. It is a very large market. It underpins all financial services transactions. So therefore, the impact of these fines, the impact is not going to be great. It is important that the fines have been placed there. It is important that we see the role of the regulators coming through, but it won't affect the market. We're also in a particularly good time at the moment in the markets. We have a lot of volatility. Equities are at all-time high. We're seeing trading in gold. We're seeing variations in oil coming up to the OPEC meeting in June, which is very important. So investors in the region are looking for liquidity. They're looking for the ability to trade, and they will see the market going forward from this point now that the regulators have acted.
How could banks regain investors' trust?
Well, the important thing is that the regulators have acted. They've put the fines in place. Now, that is very important for investors. That will bring back the trust. But actually, the trust in the individual banks, that's down to themselves. It's the way they act going forward. It's the way that they prepare and respond to their clients. So it is their issue. It is, if you look at it, a very regional focus. It is not the banks in the region here that have had the problem. The banks here have not been fined by the regulators. So we believe that a lot of investment will come back into the region because of that.
Okay, so we can say that the benefits are coming to the Middle East now?
Yeah, I think that's absolutely right. It is a very good time for the Middle Eastern banks and Middle East investors. Now, it's never good to have these fines. It's never good to have the regulators looking at your industry, the FX industry and the wider industry. But I think for the region, there is genuine benefit that can come from it. And if the banks put in place the services that the investors want, more money will come back to the region, which can only be good news.
Stephen Davy, thanks for this insight.
Thank you.
That's all for this week. Share your thoughts with us via the Euronews Business Facebook page. Thanks for watching. See you next week.